Hi guys, and welcome back to ASX Market Watch. I just thought I'd give you an update because over the last 2.5 months there hasn't really been a lot going on. This is a chart of the ASX Top 200, and as you can see, and as I rightly actually predicted, if you just check the last ASX Market Watch, I predicted about 2.5 months of consolidation, and well, happy days, that's exactly what happened. So what I'd like to do now is just give you an update of where the market is heading, because we're starting to break out right on schedule, and it's a good thing to see. It means that more trading opportunities will be coming up. So I just thought I'd give you the heads up. This time I'll be looking at the ASX Top 200 and the Dow Jones, just to give a little bit of a look into the Dow Jones as well, because it does sort of move the Australian market. A lot of people don't think that it does, but when the Dow Jones moves, the Australian market still listens. So, first of all, top 200 Australian shares. Just as you all know from any of my previous posts, this is the longer term downtrend line. This is what signaled the most recent bull market. It crossed it thoroughly in July 2009. We got an early signal in May, but the solid signal was in July 2009 with the crossing of this trend line. As you can see, it's touched about 4 peaks. The next signal we've got here is our solid uptrend line, which started from March 2009, and quite plain to see here is it's bounced off that twice, most recently being in December, which we're only just still currently in, but this is where it's found support, and it will do that. Price will find support at the trend line, so long as it's a solid long-term trend line like this one is. Now, last but not least, here's our most recent signal. So our miniature downtrend line here, and also for those savvy investors who have been looking at the posts and guidelines on asxmarketwatch.com, this is our little triangle formation here. A triangle formation is a continuation pattern. What that means is price has a very high probability of breaking out to the same direction, in this case an upward direction, as it was traveling in before the continuation pattern started. So as you can see, we've got our upward trend here. It's consolidated for 2.5 months, and now it's just broken out from that downtrend line, that miniature downtrend line, and that triangle pattern. A fantastic sign. It usually means we're going to have quite a fair bit of upside potential. I can tell you where I think the market is heading based on Elliott Wave predictions. The Elliott Wave uses the market to predict. And so basically that's about it. Also, one last thing, the market consolidates, like the overall market, the ASX Top 200, consolidates for an average of 2.7 months at a time. When it consolidates, it's an average of 2.7 months. As you can see here, we've got about 2 months back in April to July, May to July, and now we've got about 2.5 months here. So that's the average. You might have more, you might have less, but over the last 25 years, the average has been 2.7 months. Pretty much spot on right at the moment. It really doesn't get much better than this. Based on Elliott Wave, we've seen 1, 2, 3, 4 waves. We're looking for our last, final, 5th wave, which tends to be one of the shorter waves. Basically, it'll usually be 50% to 100% of wave 3, which is this one. So we've got wave 3. It'll usually be about half of that again. So we're looking at between 5,100 and 5,300 for the market to go to before it starts to falter, and then I think we'll actually see another bear market starting in or around March 2010. You heard it here first, but that's just my personal speculation. Again, that's pure speculation. I have speculated before. I tell you when I am, and when it's not based on solid rules. But Elliott Wave is based on solid rules, and we're looking at between 5,100 and 5,300. And yeah, simply because we've broken out of our continuation pattern now. So happy days. I'm buying stocks personally. I hope you are too. And the reason why we buy stocks, again, just so that you know, is because 3 out of 4 stocks will follow the overall market. So that's something that you should be aware of, because it puts the odds of probability in your favor, which is what we like. So Dow Jones Industrial Average. Again, just quickly, we've got the long-term downtrend line. Now, this is the one that I was really worried about. If you look at the previous posts, I thought that we would find resistance here, and we have found resistance here. As you can see, like this great little consolidation pattern. It's consolidated for around 2 months on the Dow Jones as well, around the 10,500 mark. And where is that? That's exactly where the uptrend and the downtrend line meet. So is that a coincidence? Well, you go and backtest a few stocks and I think you'll find that it's definitely no coincidence. This thing happens, like this phenomenon happens extremely regularly. It's quite disturbing, and it's quite good if you know how to use it. So on our uptrend line, we've had 1, 2, 3, 4, 5. Most recently, again in December, our 5th little bounce off the uptrend line, and now it's just starting to break out here as well. A fundamental analyst friend of mine, also mentioned that while interest rates in the US are pretty much at zero, the market really can't fall because people will be borrowing money at 0% or close to it, and putting it into the stock market to make money from that. So in all honesty, as long as that's happening, the market's probably going to go up in the Dow Jones as well, or in the US. So that's basically it. I hope that's helped, guys, seriously, and I hope you're buying stocks and making money. I've probably got about 20 open positions at the moment. They're all doing fantastically. I can look at a few individual ones next week, but in all honesty, you should be able to use the rules on asxmarketwatch.com and figure out the buy and sell signals for yourself. Very easy to do. So thanks for stopping by. I hope it's helped. Happy trading, and I'll see you next time. Bye.